Hello, everybody. Welcome back to the Sofi Weekly. It's 10:01 p.m., 9/22/2023, September 22nd. We are here to talk about how Sofi has collapsed this week, down about 18%. Pretty rough. We've got a lot to talk about. I know a lot of people are hurting. A lot of people are still probably up on the stock because you guys loaded up in May, like a lot of us here. But the stock is down this week, and it definitely hurts, along with the entire fintech sector. So we got a lot to dive into to make sense of all of this stuff that's happening today. I don't control the stream today, so I can't click in comments or anything like that. So Tanner is going to be navigating all that. It's all Tanner. He has the whole control. So, let's start off with, or go ahead, Tanner. Go ahead.
Oh, no, I was just going to say the first order of business. No, I'm just kidding.
Bro, I like the music. I actually like it. It's a good song in your fintech frenzies. It's good.
Little fintech frenzy action. No, I'm just kidding. This is the Sofi Weekly. Sorry, take it off a minute.
Wait, so let me ask you a question. You know how you said you were going to go from live to uploading pre-recorded videos? Did you switch to live because you like the kind of community part of being live?
Straight up, it wasn't the community part. However, I do find way more connected on the lives. It was just the insane amount of workload that it was to upload and then re-upload, or sorry, like download the footage from the software and then re-upload it onto YouTube. I thought that was going to be quick. It added like an extra 30-45 minutes. I'm like, and for what? Yeah. Like, so I really wanted to make it work, but then there was days where I was just getting home at a certain point and I could have just went live, but then I'd have, like, I don't know. It's just easier to go live. That's it.
That makes sense.
I can spend more time researching, and I think that's better if I have better content than to just, I don't know.
Yeah, agreed. Let's start off with just asking everyone how they are. Tevis, how was your week?
My week was really long, and it felt like a month, but I bought more Sofi this week. So
wait, why did it feel like a month?
I just work stuff and a whole bunch of like news.
A whole bunch of what?
I asked Tevis, I said, Tevis, how you doing? And then he went like, oh, I'm not making content right now. And I was like, no, I'm asking you how, like, as a friend, how you're doing. And then he went, oh, okay. And then sent me a novel. He just like dumped all of his drama and emotions on me. And I was like, all right, man, next time I'll just ask about the content.
Probably a safer bet.
I'm just kidding, bro.
Did you respond with an appropriate paragraph back?
What?
Did you
respond? He was just like, let's connect later.
It's like, I got a fintech frenzy. I don't give a fuck about this. Yeah. I've noticed voice notes are way more effective than typing. So I just started sending a lot of voice notes. I'm like, you know what? It's just easier to get things.
That's when I knew you were like a complete hustler, is that whenever you sent me your first voice note and I was like, dude, I feel like I'm part of an MLM. Like someone's trying to.
I was like, I don't have time to type this shit, bro. I'm on the treadmill. Let me just say this shit. Move on.
Yeah,
Steve, how was your week? Steven, you are muted. You've been doing this podcast with us for like fucking 10,000 years.
I was typing. I was clipping.
Is the mic close to your mouth or no?
Is it in the right direction?
Is that better?
Just remember when you were in college and you wanted to experiment, think of the mic as the things you were experimenting with and treat it like that. Okay, go
Where your head is at is so fucking crazy.
Go ahead.
I got nothing to complain about. My week was great because you know what? We have a pretty big buying opportunity right now.
Yeah. But okay, wait, real question though. Does your wife think it's a good buying opportunity right now?
I can text her.
Okay, because from what we've heard is that she's a much better investor. So I want to know what her thoughts are.
Way better.
Have her on the show instead of Steve, apparently.
Okay, let me ask this question. Did anyone near and dear to you guys, whether they're family or friends, ask you about the stock market declining this week at all? Nobody?
Yes.
I'm a financial.
You froze for everybody, right? Not just
Tanner froze.
As soon as you say I'm a financial analyst, the FBI calls. They're like, no, you're not allowed to say that. Tanner probably he's getting some insider deals coming in right now. Look at this. The host fucking leaves. Now we can't adjust it. Now we're screwed. Look at this. This is what happens when you let Tanner host. Look at this shit. Okay, Steve, who asked you about the... Oh, there you
Hi.
go. Tanner, go ahead. You froze. Go ahead.
Yeah. No, I was just gonna say I'm a financial advisor. So yes, I was asked about markets. But no, in actual whatever, there's a bunch of news today that I think that we should stay on topic instead of just about this. So
It's called a cold open, Tanner. What the fuck is wrong with this man? Like,
dude,
you're the one who's like, let's open it. Goodness.
Business.
All right, go ahead. Let's get into
News.
the SoFi news. Let's do it.
You're just asking how everyone's day is. This is my day. Okay, this is my day. You've been following the Federal Reserve more a bit. Okay, they're saying we're going to stay higher for longer. How does this affect SoFi's loan portfolio? This is what I'm worrying about. Okay, how does this affect a lender like SoFi if selling their loans becomes harder? If we're holding on to loans longer rather than holding on to interest rates longer rather than them coming down, or is it fine because it's stagnant?
Before you answer that, who is the one that has said for the longest time they're not freaking cutting in 2023?
No, I got to give you your flowers. You're right. Steve.
I've been saying that since day one that everybody is wrong. They're not cutting. Take them at face value. Go ahead.
You're right. You're right. Well, let's start off with this proper question. So SoFi was stuck in the 8 to 870 range for a while. It broke out to 915 last week, and then it collapsed today to 755. So I think for the week it ended like 10%, 15% for the week.
17%. But
17. Okay. So let's start with Tevis. What?
You're such a host, dude. It's so funny.
What?
Sorry, I just asked you a question, then you were like, let me ask someone else instead.
Let me reframe the question and make it make sense.
All right, so let's do like this. Let's ask a more basic question.
Yeah, because Tanner said all this complicated shit. Basically, what do you think the Fed did, Tevis, this week that led to the deacceleration of not just SoFi, but all of fintech? What are your kind of macro thoughts?
It's not all of fintech. It's the entire market. It's the entire market because
I would disagree with that. There were tech stocks that were doing well today, and fintech.
Okay. The indices were down over the week.
I mean, that's true. That's fair.
Okay, that's all I mean by the entire market, and that's simply because they were just more hawkish in general, and now they're leaning heavier into a November rate hike as well. Which is, I mean, they're saying like, oh, economy's doing fine right now, so we're just going to go a little bit heavier with the rate hikes, and that's obviously not what the market wants because, I mean, it's arguable that even the last rate hike was excessive, and so one in November would be super excessive, but obviously the Fed has to telegraph more hawkishness because they cannot be dovish right now, and that's why the market pulled back this week, and that's why SoFi is down.
Yeah, but if markets are pulling back, that means people are believing this. What they're saying. They're not just saying, oh, this is what the Fed has to do. They believe that's what the Fed is going to do.
And raise in November?
Yeah. Make it higher for longer.
Yeah. But like even them saying it introduces more uncertainty, right? Because they said it like, oh, there could be a possibility of a rate hike towards the end of the year. That's very non-committal. And now that we're getting closer to the end of the year, they're saying, yeah, like, I think it was 12 Fed members were saying on the dot plot, we're saying that 25 basis point hike in November is on the cards. Mm-hmm. And so now it's becoming more of a reality. And you're not getting the market. The market is not moving from retail. The market's moving from institutions. And it just becomes a cost benefit analysis of where they want to allocate funds relative to risk in the market.
I learned what a dot plot was this week. Go ahead.
Good job, man.
I was like, what the fuck is a dot plot? What is this shit?
Someone in the chat said that the Fed did nothing and the market is frozen. That's not necessarily true. Although they didn't actually raise or lower rates today, they did say that they probably won't see a rate cut and they'll keep it up to like 5.1% on the Fed's fund rate till like September of 2024, which is much higher than the 4.3% that they said before. So people are thinking it's going to be a lot higher till it starts to come down, which means risk off money, putting money in just treasury bills will probably do better for longer periods of time. And so you don't need to rush back into equities because you have safe ways to make easy money without any real risk.
Exactly. Yeah, I can have 5% return, easy peasy with zero risk involved.
Yeah,
Why
5.5
in this market. Yeah, exactly.
All right, that's not necessarily true.
Why is that?
Because yes, you can put X amount of money into a CD or T-bills and get anywhere from 4.5 to 5.25%. Nobody is going to dispute that because those are the facts. The other side of the facts are right now the S&P is up 12.97% on the year. We don't know where it's going to finish. Even if it declines and you don't get an end of the year rally, let's say it's up 7 or 8%. You still did better in the S&P. I don't remember the exact stats, but it is very unlikely that you have 2 red years in a row. Just buying index funds is probably a better investment for a lot of people than trying to pick individual stocks, because over time the S&P outperforms. If you were in bonds at the beginning of the year or a CD, look, I have a good amount of cash in a CD. I would have to check the rate. I think 4.2%, and it'll term in maybe a month or two. But at the same time, I was also buying S&P and other things, but I am up more on S&P investments than I am on CDs. And depending on where you are in the cycle, if you have a lot of money, yes, it does make sense. But for people that are trying to grow money, CDs and treasuries aren't necessarily a place for long-term investors, because you're only going to get these rates for another year or two, and then they're going to come down. It's just like people buying inflation bonds. They didn't realize that half of the rate is fixed inflation rate, and it changes.
Can I offer a counter, Stephen, and then you just let me know if you think it's valid or not. So if we agree that en masse institutions run the market relative to retail, right? It's not me and you moving stuff. It's the big boys.
It's where the money's coming from. The majority of the money comes from institutions.
Here's the thing that I want you to agree or disagree with. Money managers in a time like this are judged more heavily on not losing money than they are on making big returns. So they're very risk averse, especially because they don't want to be the firm losing money when everybody else is losing money. And it's not so much a game of, can I get 13% versus 7% versus 5%? It's how can I not lose money this year? Because that's where they're going to make their commissions, and that's where they're going to keep their jobs, quote unquote.
And wait, can I add on that real quick?
Well, yeah, go ahead.
I just want to also say that the what you're saying about the S&P already being up 7%, like that's fine, but that's already priced in. It's about new money coming in today or what people are going to do today. It's not like everyone's investments get retroacted back to January 1st, right? So if we did make 14% in the S&P or even higher, then you can say, okay, I'm going to take my chips off the table and move it to 5.5. Now, we don't know what the future is going to hold, and we don't know that that's necessarily going to be safer. It could stay at 7% up on the S&P 500 for the rest of the year, and your money definitely would have been better priced in T-bills.
From here, yes, because we don't know.
But yeah, but that's where markets are moving out of stocks today. So, they didn't move out January 1st. It's moving out now.
Going to what Tevis said, money managers are going to try to do something to beat the market because they get judged on being S&P, not judged on T-bills. And my thing is, why would anybody use a money manager if they're not beating the S&P? Because why pay them their 1.5 or 2% when you can just pay Vanguard 0.03% on an S&P fund? Like, unless you have somebody that's actively beating the market for you year in and year out, it's not worth it. This S&P fund is probably better for most people, including myself.
I mean, I agree with you in that investing strategy, but it's not where the money's moving. Like if you see people leaving the markets, it's not because they're all going to go buy homes. It's because they're finding risk off assets. Money off markets is at extreme highs right now.
Well, there's over 5 trillion sitting on the sidelines.
That's what I mean.
Yeah.
Because there's an easy rate of return on T-bills.
Here's the thing. It's
always easier when you don't have to do anything and you're getting money with no risk. It's always easier to do that. The problem is some people, I'm not talking about new money, I'm talking about the money that came in the beginning of the year. Those people are still stuck on the delta because the market is significantly higher than what they were getting at those rates. They weren't getting 5% at the beginning of the year. And if you look at the not the S&P, if you look at the NASDAQ, if you bought the Qs, I mean, the NASDAQ is up year to date, still 27.5%.
But the same can be said if you're like Yes, let's say we're buying bonds back in January, they're not priced as highly as they are today because you can get higher rates. But the same is said on the way down as well. If a rate cut happened, for example, in this last call, then all the people that are holding 5.5% will get even more because people will want to hold that high rate till maturity, and so they can sell it for even more than what they even bought it for.
Here's the thing.
So it goes both ways.
No one gives a fuck about this little 5.5 bullshit percent. Okay, nonsense money. Like Steve is absolutely correct. The Fed is going to cut rates in 2024, and they're likely going to cut it before September. In fact, the Fed futures just indicated there's a higher likelihood it's going to be cut back in July versus September, which is when things went really red a couple days ago when they thought that was going to happen. I think the Fed is talking out of their ass. I think they obviously know CPI is going to fall off a cliff. There's many arguments. I think a lot of people in the chat probably have heard all the reasons for why CPI is going to come down. When that happens, along with the fact that something's going to break, maybe it's delinquencies, maybe it's a credit event, maybe it's just a generic little recession that we have, they're going to have to lower interest rates. I mean, the consumer not having enough money to spend because of things like student loans, there's going to be something in the economy that pushes them to lower interest rates. When that happens, this 5% nonsense is going to go away. People are going to put their money back in stocks. In fact, if the S&P gets back to 420 or dare I say below 420, and that's a proper correction of about 10-15%, that $5 trillion is not going to stay in the money market funds. They're coming out to play. They're not going to handle that 5% when you got Google going back to like 125 or something. So I think it would actually be a really nice thing to see the S&P get back to 420 because a lot of money is going to flood the markets and no one's going to settle for 5% when you've got some of the most innovative companies in the world with AI being a deflationary effect, not to mention all the fucking disinflation coming from China and their economy that's going to affect our raw goods and commodities. I think things are going to be fine in 2024.
When you say 420, you're talking about just SPY, correct?
SPY,
yes.
Yeah, that's what I mean. SPY, sorry. 4,200 on the S&P.
Okay, so one, we're not just talking about 5.5% because I think people can get caught up on the idea that 5.5% is such a small amount to be made. The real conversation here is that if markets you're looking forward to make a larger percent, like 12%, well, what you're really working for is 6.5% risk on, working very hard, trying to do all the due diligence that you can for 6.5% is what you're taking all the risk on. Okay, where positions can turn on you, and weeks like this can happen where we're down 16, 17% in SoFi, where people might have bought in the $9 ranges. Okay, also then you can try to aim for 10 to 12% gains versus 5.5 for absolutely free.
Yeah, the 5.5 is a parking lot. Like it's not like
it's so then you can get at better prices regardless while still making money.
No, but Tanner, you're using very elementary analysis to be like, okay, this is risk free, so I'm just going to invest in it. Versus SoFi is growing 40% year over year, right? Like,
yeah, but 40% year over year,
billion of revenue. Like, there's not that much due diligence required to be like, this is a company that's going to do well.
Okay. I think 40% year over year just went down 17% in a week.
That's because the market's stupid. That has nothing to do with
but you don't want
market
to get funds.
Stupid
market.
You think SoFi's down 17% because everyone decided to go get 5% from T-bills when SoFi is going to be gap profitable in 2 quarters? You think that's what's going on?
I mean, yes, I do. Yes,
okay. I think SoFi will be right. I think SoFi will end the year at $10. I don't think this is going to be
that. And
everybody needs to remember that everybody's investment strategy is different. Everybody's needs are different, and if you're investing in individual securities, you should be willing to lose every penny that you put in them. Otherwise, you shouldn't be in them, period. If you want to play it safe, there's nothing wrong with that. And if you look at retirement funds, where is the most money going to in retirement funds? It's going to 2 places. It's going to target date funds and S&P funds. The majority of it is going to go to those. You'll have some go to small cap funds and mid cap funds and some to annuitize or some to
okay, but Steve, this is the question. Do you think that over the next couple months, let's say the S&P goes down another 3-4%, that people are going to be so scared of the Fed interest rates, whatever, that they'd rather take capital instead of putting it into undervalued companies like SoFi, Palantir, et cetera, that they're going to get a treasury yield? That's what they're going to be more excited for.
It's not about being scared of the Fed.
I think you need to look at it differently because the markets tend to have a herd mentality with a lot of things. And we live in an information age where it wasn't like this 4 years ago. It wasn't like this 6 years ago. It's a much different age today, and information is moving so quickly. And there are so many people that pay attention to things that people were never paying attention to. Nobody cared about the Fed. Nobody cared about watching Fed conferences. How many people are regurgitating everything that Powell says? How many transcripts are floating around? I mean, you have a lot more people that are informed, and a lot more people are realizing that if this continues to go on, there are real risks to the market. And people are making decisions based on that. And we can go through the risks. Look, it could be bad. Like, there are a lot of risks, but there's also potential a lot of upside. Nobody knows what's
Okay,
going to
so
happen.
Steve, you gotta answer the question. Do you think people are gonna go for a treasury yield if the S&P gets to 420, 4,200, or they're gonna put their money at a 420 SPY?
Look, it
You
depends
see people,
where you
though,
are
but
in
what you
life.
mean is
Don't need the
funds. You
money.
mean
No,
Like,
no, yeah, people. Let me ask Tanner because Steve, you're not answering the question.
No, but
I'm talking about
it's a loaded
investment
question
firms,
that
like
you
hedge
can't
funds.
answer without knowing somebody's situation. Because
Yeah,
if
but
you're
Steve, we're on a
retiree,
fucking podcast. You don't have to know everyone's situation. I'm asking you a hypothetical. Tanner, like, do you think hedge funds are going to go for their treasury bonds if we
They
get
are.
more decline? You think that's where they're going to shift their billions of dollars to versus riskier assets that are not that risky if they get to really attractive valuation?
dude, nobody's
man,
paying
so
here's
2
the thing,
for a
is-
hedge fund to invest in freaking T-bills.
they are investing in T-bills? Like,
Okay.
I mean, look, let me just say one thing. I mean, you've seen these funds go into these individual names. When do they go? There was no fund buying SoFi at $4, but they were piling in after we doubled up, after they'd essentially gotten confirmation. Or more importantly, let me put it, closer to you. For Palantir, there was no funds really piling into Palantir until they became profitable. So funds, if we go down and hit the absolute bottom, funds, in my opinion, are going to be less likely to enter at that point versus after we've rebounded and they just
No, but
pile in on the way
why?
up with that
But
confirmation.
Is your logic just that stocks go down, therefore they sell? Because in 2022, it made sense because we were like at the cliff, we were about to fall off, right? And it ended up happening. I don't think we're at that cliff when we're about to fall off to the point where all these hedge funds are scared anymore. I don't think they're scared of the Fed, is my point. I think the Fed's bullshitting and everyone knows they're bullshitting.
They're not
well,
bullshitting.
that's where you get caught up in the idea of don't fight the Fed, because too many have tried that. Okay, and
I think we'll get a cut in 2024.
You're
We're gonna
already
get a
seeing
cut.
that with positions like SoFi, where they even thought that there'd be 2 rate cuts already in 2023. Okay, so we're on the SoFi Weekly here. Let's remember that they were anticipating 2 rate hikes and then 2 rate cuts in 2023. That's not going to happen. They're now going to be wrong on their expectations. Okay,
Yeah, 5% unemployment too. So
yeah, well, that they were expecting higher and it came in lower. That's true. That's true. I'm super bullish on SoFi, but let's be real with the idea that the consumer can only last with such high interest rates for so long. And so if we're going to have to endure another, let's say 9 more months of high interest rates at this point, or even 25 basis points longer, how much more can the consumer actually last?
But that's the point.
when
If the
defaults start to rise?
consumer can't last and then we trigger a recession, it's not 9 months of interest rates. It might be 6 months.
But a recession for certain companies just means, oh, okay, we can't spend as fast. But a company that is betting all their dollars on giving out loans to people and a recession comes, that means keys are left on the counter and SoFi is the one that gets left.
Okay, so let's get to that conversation then. I want Steve to go first on this because I texted Steve about this. So Tanner, you're of the opinion that if we have a recession, even if it's a mild one, SoFi's fucked, correct?
No, I'm holding the stock. I'm saying they're
what's your point?
Disproportionately hurt because they're a bank. They're betting.
No, so
on
are they
the
fucked
idea.
or not?
I'm holding the company because I think that the stock is still so underpriced that a recession.
Okay, Tanner,
is
I didn't know when you became a politician. Will SoFi stock get screwed if we have a recession? Yes or no?
If defaults rise, the stock will go down. How low? I have no idea. I'm
Steve,
betting.
what do you think about that?
So people need to realize that, and I'm going to answer your question. The stock market is not the economy. Like, people need to realize that the stock market is not the economy. I cannot say that enough.
Who's the politician, eh?
But
Steve, the only reason I'm pressuring you to get to the answer is because people don't have the attention span to hear like a monologue and then get to the answer. That's why I just want you to get straight to the point.
based on herd mentality, SoFi stock is more probable in my mind to decline if default rates go up, because you're going to have possibly a credit crunch in the banking sector, and SoFi will get caught up in that. Now, if SoFi actually gets impacted, I think they're in a much better position than most banks, where it probably won't hit them hard enough because if I remember correctly, their credit card business is not a large portion of their business compared to their lending segments, which it doesn't necessarily matter on the credit card defaults. It matters more on mortgages and bankruptcies. So there's a lot of things that need to go wrong. Now, that's the game you're playing with the Fed. The Fed doesn't care about the stock market. People need to actually understand that. The stock market has nothing to do with their mandate. It's to keep prices stable and have maximum sustainable employment. That has nothing to do with the stock market.
Yeah.
So everybody thought the Fed was playing chicken and was going to jump. They're not jumping. They don't care. They have a very specific goal. And the thing nobody's talking about is energy. Like, there are decisions being made that have allowed outside nations to cut production. Cutting production is not good when we are not increasing production to offset it as the largest oil producing nation. When oil gets to 90 and even 80, it's very bad because all the inputs go up for all the other products, and that helps inflation go up. That makes the cost of products go up, which gets passed on to the consumer, not to mention transportation and everything else. Like, energy is correlated to everything, and people need to actually understand that. And I'm pro renewables, but it is a sum of all, not one or the other.
Do you think we're going to be at $90 oil for the next 3 months?
Dude, we're going past 100 in my opinion.
Really?
Yeah.
Okay.
Oh,
I don't think that's okay.
Oh, that's if you look at the cuts that just happened and where we are, yes, there's a very good chance we're going past 100.
Okay.
I love Macro Steve. Whenever he gets into a topic that he's really, and he goes, oh yeah, dude, I love you, buddy. I love the passion. You only see it in oil and alternative assets like Pokemon cards. Really appreciate it. But I do think that I was reading in the chat, some people are putting up the idea saying that, SoFi is sort of immune to this idea of a recession because we have high value customers. The problem with that is there's still a rate of change. Okay. We might not see as high of defaults as a subprime lender, but then you also have APRs that go with that. So if you're charging 18%, 25% for those loans, yeah, defaults will be higher. But still, the risk versus reward, we're making very much less than they are on those loans because we might only be averaging out 12% on personal loans and even less than that on our entire loan portfolio. So if you average that all out, the idea that a prime versus a subprime lender is quite evened out because of the APRs.
So you think the economy will get to such a bad place that we'll have rapid amounts of delinquencies, basically is what you're saying.
I mean, wasn't this the argument like in December of last?
Yeah, but that's when inflation was at 8%. Like,
sure, but the argument was the Fed is going to kneecap the economy by raising rates, and they have. And we were going to get like no soft landing and delinquencies are going to rise. And SoFi was fucked as a result of it. Like, that was the whole thesis. That was like what Chris's thesis was before he even went into the stock.
Inflation is not the thing that's causing the defaults. It's the rate that causes the default, right? And then even whenever inflation goes down, remember, this is not deflation. It's just disinflation. So if, for example, last year we were getting 10% inflation, then now it goes down to 5%. We're still went from $100 to 110, and now it's saying, oh, it's going to go to 115. It never got cheaper. So default is absolutely still on the table. Just because inflation is going down, it's still heading up. We're still inflating, and that's the problem.
Yeah. So look, as much as I'd love to speculate on a recession, I think every time that the FOMC meeting happens, there's a market reaction because people, and by people I mean institutions, are pricing in this latest hike or pause or whatever you want to call it into their models going forward, and they're making assessments based on that. Do I think like we're on a downward spiral for the next 6 months? Probably not. We're probably going to be on a downward spiral this week. until, you know, just the sort of the bad blood is out and people who want to be out are out, and that's it. This has been priced in until the next FOMC meeting when we get more information and more stuff is priced in. Like, it's just
I don't think it's that that easy.
Well, because
people have to remember, we're not like, yes, we're growing 40% year over year, but that is going to start coming to a cap if SoFi can't sell their loans. If rates stay higher for longer with expectations of more rates going forward, that means it's going to be harder to sell loans.
I know, but all of this is hypothetical at this point.
That's what I agree.
I mean,
and all of it's bullshit hypothetical as well.
All investing is hypothetical. We're betting on the future.
But Tanner,
you're talking on the macro, and there's so many variables in the macro that it just becomes this esoteric conversation.
I don't think the Fed is going to raise rates again. I really don't think it's going to happen. I think they know they're going to crack the economy and they're going to trigger the recession versus letting it naturally happen if they do that. I think interest rates will be cut a little bit earlier than what they think. I think, you know what we're not talking about? Powell does not want this to be the 1970s. He really needed to make sure there was no euphoria on the press conference by saying we combated him. And so he injected all this hawkishness, which honestly, good for him. He probably had to do that just to make sure we kill inflation. And I think inflation will be
hard agree. He has to project hawkishness, or else people are going to be like, YOLO, it's the 1920s all over again.
I just and I want to make sure that people in the chat also understand what I'm saying, as well as the fact that I'm not selling any SoFi shares. In fact, I just added. Today was my first buy in a little bit. But
how much did you buy?
An entire panel is saying one thing, I want to make sure that we're not just completely one-sided bias. So I feel like even this panel is pushing me to be more bearish in this conversation. So then the bearish points are heard. But that they are definitely real.
No, actually, you're agreeing with the crowd that's saying we should sell and we should be like bearish and all this shit.
No,
I'm not saying you're selling. I'm just saying you're selling. I'm just saying. I'm not saying you're selling. I'm just saying you're agreeing with the far majority of people that go on CNBC. You know how many CNBC titles that came out today with the word recession? Like, you're echoing their talking points. And I think we're the real contrarians here.
Look,
that are saying, I don't think
recession does not have to happen.
I agree.
Just because you have an inverted yield curve does not mean it has to happen. For a recession to happen every time, and I showed this last week, unemployment needs to get to 5%. Now, I don't know what Powell's going to do. If they raise rates, you get a better chance of unemployment getting there. I don't know if that's really going to happen going into an election cycle. And that's something else that needs to be considered, because there's going to be a lot of political pressure coming in on this.
Huge point.
I mean, really think about that. No president, and it doesn't matter what side of the aisle you're on, no elected official wants to go into a re-election year when you have inflation that's not leaving, when you have high rates, and when cost of capital is increased, not to mention supply is less than demand, causing high elevated prices. Nobody wants that. Constituents are not happy. Nobody's happy voting. Anything can happen. So there's going to be a lot of political pressure next year.
Let me put this out on the panel. What would make, let's play this game. SoFi end of October, $11. SoFi end of October, $6. What has to happen for either scenario? Macro or company oriented? You can take it anywhere you want. Let's start with Tanner. What would get SoFi to 11 by the end of October? What would get them to 6 or 7?
What would get SoFi to 11? Student loan expectation, or student loan refinancing came in way higher than expected. They were able to sell loans with, higher than expected gain on sale margin. Customers came in at lower CAC costs. Just an all around improvement on the company.
So those basic things, getting it back to 11, seems to push back against a lot of the.
Say middle of November.
But they're not. You say basic doesn't mean that they are basic. The idea that SoFi, when every other lender is not getting better gain on sale margins for selling loans, right? Lending clubs getting crushed. For SoFi to get better rates than they were for the same product or very similar products is not simple. That would be very, very complex. So, I don't agree with that.
Okay. So, I think neither 11 nor 6. I don't think either of those will be hit by end of October personally. What I will say, very simply,
Well, yeah.
I think 6 is more likely than 11 because I think we can hit 6 due to macro, but in my opinion, we'll only hit 11 due to SoFi specifically.
True.
Well, Steve thinks it's going to 15, so I don't even know if I need to ask you.
Well,
I mean, look, I think it certainly can go to 15 by the end of the year, but a lot's going to depend on the market. SoFi can go to 6 if the market continues to sell off. SoFi can follow a trend, but what gets SoFi back to 11, even if it doesn't stay there, because we've seen after every earnings report, it has popped and then sold off. What can get it back to 11 is they are projected to report on October 31st. If Q3 is GAAP profitable somehow, if they beat and raise and increase guidance for 2023 fiscal year, you can certainly have a run to 11. Whether it stays there or not, it's a different story.
Yeah, I agree. Someone was saying in chat earlier that, we've been talking about a recession possibly happening for a year and a half now. And I want to clarify that that's not the length in which we've been talking about it does not reduce the chance that it happens. In fact, if the conditions are still applying for what causes a recession now than a year and a half ago, that's a higher chance of a recession because people's reserves start to slow down, right? The credit card lending and people's debt that they're taking on is still increasing, which plays into SoFi's card in the short term. In the short term, all that credit card debt can lead to a ton of refinancing into SoFi's personal loans. That's where all the bulk of personal loans have happened. But if rates stay high and the consumer is still having a hard time, reducing their debt payments, then they will not just default and worry about, 25% on their credit cards. They'll have a hard time paying back the 15% that they have at SoFi personal loans as well. And then that's where they'll default, is whenever it's actually in our hands.
Can I pivot us?
Sure. Yeah.
Can you what us? It sounded really sexual for some reason.
I mean, that's
Pivot us?
Can you pivot us?
Yeah.
So I don't know, man.
Earlier this week, I just want to bring it back to SoFi specific news because we've been talking about macro for like 40 minutes out of a 1 hour show. SoFi car buying. Did you guys see this? So a partnership. Okay, whoever had it up, thank you. Well, a partnership with TrueCar. Bender 9000 broke this on Reddit. This is still in beta. We're expecting a launch probably towards the end of the year. It's not live for everyone, but basically, the partnership right now, I think it would just work as all of their other partnerships in terms of SoFi just getting a referral bonus. I don't think SoFi is actually going to be, underwriting these loans themselves, the car loans. But the interesting part here was also the possible synergies that we could have with SoFi's insurance product offerings. I don't think this is going to be a needle mover by any stretch of the imagination in terms of dollars and cents. It's just nice to have in their ecosystem because they already offer a whole bunch of insurance products through referral based. So this was something in that similar bucket. What do you guys think?
I said this on my channel as well, but I think that there's the more sort of places where you can spend in sort of a commerce style for SoFi within their platform means that whenever you think about spending, going anywhere, doing anything about spending money, you're going to start to think more and more of SoFi. I use the example of Uber Eats where now if I'm even thinking of a restaurant that I want to eat at, I'll just go on Uber Eats and search it to see if they have it. And most times they do, because the results come back so often that they do have the relationship with that restaurant, that I think that same sort of thing can happen with SoFi. If you're not even knowing that they do offer a service, you're still more likely to check if they do. If, for example, they've already handled your travel through Expedia, already handled your buying of a car through this way, or even, potentially renting a car through Turo, through SoFi. Like they can make all these partnerships and make it so then whenever you're on the app, you use the services that involve spending money.
Absolutely.
Steve, what do you think?
It just helps the environment be more sticky. I mean, you have to like it.
Yeah, I didn't even, I didn't know we didn't do auto loans. I thought we did everything. So I mean, seems like great to me. Like if we're expanding into auto loans.
Well, it's not a definite expansion into auto loans. It's a definite chance that people could buy a car through TrueCar, and we're going to get a referral fee for it.
Right.
So it doesn't mean that we're going to lend to them yet. That hasn't been confirmed, but it's probably a high likelihood because the cross sell there is quite obvious.
Right.
I would imagine there's also like some type of kickback for SoFi Plus members, similar to like the travel thing, where you might get a discount or something to that effect, or maybe even a bundling with like an insurance product offering. I can imagine SoFi just giving you like, you know, when you open a new account, they give you 250 or something like that. If you, you know, do your car through SoFi via TrueCar, and then you also get car insurance through Lemonade via SoFi, then they'll give you like $100 or $200 or something, and then they get the kickback from both of those companies.
There's a couple things in chat that people are talking about that I thought we'd bring up. One person said even high earners, most 200K earners still live paycheck to paycheck. I don't know about most, but it is an absolute reality that even high earners are a potential for default with SoFi. It doesn't necessarily exclude them because of things like lifestyle creep. If you're making a lot more, you're driving a Benz, you're driving, you know, a much more expensive car, you have a much more luxury home. Steve has like 5 properties, so you know.
Schools should place more emphasis on financial literacy. It is disgusting that they don't.
Right.
And it's also disgusting that student loan debt is the only debt that can't be expunged in bankruptcy court because it allows people to take loans they can never pay back. Don't go to an Ivy League school to get a liberal arts degree. You're never paying that loan back unless your family's wealthy.
Are you saying people shouldn't major in philosophy?
I'm saying that if you want to do that, go to a state university. Don't go to Brown.
Actually, if you go to Brown and you major in philosophy, you'll have a much better chance of getting a really high paying job because it's an Ivy League. So you picked a bad example, but go ahead.
I mean, can you throw up the thing that I sent in our private chat? This is the other thing I want to talk about today, and then
Tanner's got to do it. He's the host.
Yeah, I'm on it.
Tanner, you want to kick us off on this?
So this was QED Investors. They're known for investing in a lot of fintech companies. They recently just had a summit, and now this is an old slide. This is actually from 2021, but still holds true that fintechs are having a much higher I guess, satisfaction score through NPS, which is Net Promoter Score, to their customers versus traditional banks. So as you can see up at the top, you see 2 of my favorite companies, SoFi and Nubank right here. Whereas the traditional banks that hold most of the customers' assets and client names, you have Wells Fargo at 4, Capital One at 13, Truist at 14, just insanely low numbers in terms of satisfaction score versus the new up-and-coming fintechs.
Yeah, I mean, we knew this, right? Because the big banks suck.
Yeah, just an insane discrepancy, man. Like 4x higher NPS scores, 5x higher NPS scores. It's just ridiculous.
And they were talking, the important part is that they're talking about fintech broadly. They are, if I remember correctly, QED does not even hold SoFi anymore. So for them to show SoFi and Nubank specifically as being these, well, and Affirm and Lending Club and all these, but as being the 2 highest is a great sort of show of excitement because it's like they have nothing to gain by showing SoFi. They're not even shareholders anymore.
Mm-hmm. Yeah.
But yeah, I mean, I just think over time, as people learn more and more about SoFi, there'll be more and more switching. One of the craziest things is the fact that most people don't even know what SoFi is yet. You know, to the 400 plus people that are on this SoFi Weekly, it's like it can make it feel like obviously this is the next big up and coming bank, but most people don't even know it exists. You know, most people, I'd probably say, think of it as a stadium and not even a bank.
That's true. That's true. Steve, go ahead. You gonna say something? Steve's like, I got World of Warcraft on the Steve, what alternative asset did you buy this week?
I didn't buy any this week. I actually have a dilemma on what I'm going to buy next week.
Is SoFi on that list, Steve?
SoFi's on that list.
Okay.
And that's what's screwing me up right now.
So Tanner and I were the only ones that bought SoFi this week? Or Amit, did you
No, I bought
like
SoFi.
one share or something? 10 shares?
No, fuck you. I bought 20 shares in my Roth.
You bought
Also-
one share of something, didn't you?
No, I didn't buy one share of anything. I don't think I bought one share of anything.
Maybe one contract. I don't know.
That was
I want to put Amit on blast here. If you ever see Amit online say, okay, you know what? The whole SoFi team thanks you for this donation, or should I send Tanner and Tevis SoFi shares for playing
Oh, yeah,
SpongeBob, or anything along these lines where he ever says he's going to send us any money, be full well and true we did not receive anything.
Wait, for
okay?
what? What do I owe you shares for?
The SpongeBob clip.
Oh shit, I forgot.
You know how many times that's happened where you're like, dude, if you jump in the pool, we'll all send you money, and I get nothing. I've never received anything.
I can't Venmo you. You're in Canada, right?
Yeah, that's why PayPal exists. I guess
Can't
that's,
sell
I guess
you.
that's their big moat.
Yeah, I'm gonna have to fucking PayPal. All right, I got to PayPal you. What? Set $14 to?
No. Put buy 3, gift 3 memberships for my channel. That's what I want.
Oh yeah,
You
I
just do
forgot
that
you
right
could
through
do that.
Google.
You can do that right through Google. That's actually
Yeah,
good
you
here.
can just do that right through Google.
Yeah,
I gave
live
TJ
if you want.
Google takes a big chunk of that. Tanner, are you sure you want that?
Yeah, I mean,
I'll
there's
just
a lot
save,
of
I'll just
there's
save
a lot
mine
of
for
Google,
Vegas. We'll put
there's
on
a
a
lot of
number in
Google
roulette.
shareholders out there. They can relish in the.
I gave TJ $10 in his chat today when he was live.
Well, that is true. You actually have donated to me a couple times.
Oh
so-
yeah, I've definitely given you a bunch of super chats. That's
a bunch.
given you at least 4 or 5 of them, I think.
maybe. He's a generous
Anyway, do we have any other SoFi news or no?
guy. No, I don't think I could go on and
We can
on.
talk PayPal a little bit for the last 10 minutes.
Sorry.
We can talk PayPal for the last 10
Yeah,
minutes.
hit 58.
Yeah,
Steve,
so-
should we buy PayPal?
So I don't know what anybody else should buy, but
Depends on your situation.
I should buy more PayPal. And
Steve, no one's gonna sue you. I promise. No
Yeah.
one's
no,
gonna
but
sue
I don't
you.
know anybody's
They're
situation.
gonna sue
Look,
Tanner before they sue you, or me before they sue you.
I have a decision to make because I was originally going to buy more PayPal, SLG, and some of the PIMCO fund that I've been buying. And now with the market going down 4% today on the 4% this week on the NASDAQ, looks like I'm adding some Palantir and SoFi into that mix. And
Are you officially up 100% on SLG? Have you doubled on that?
I don't know.
Because you told me about it at 19. It's at 40. So I'm like, that's. I mean,
No,
it's like,
not yet. I didn't. Oh, no, I don't know.
He could be buying more on the way up.
Because I've bought it as much as like 38 and as low as 19 and everywhere in between.
Got you.
So I would say, excluding dividends, I'm definitely up. I would think I'm up at least 50% before
Tevis,
dividends or anything.
Tevis, do you hold PayPal?
I just hold Leaps.
Okay, Steve, you hold PayPal?
Yes.
Amit, you hold PayPal?
Same with Tevis Leaps.
Okay. Let's talk about why PayPal went down so much. Who wants to take a guess that it's rates higher for longer? Any show of hands?
I mean, it fell with all fintech, Robinhood, SoFi, like at 11 a.m. Like it was clockwork. So,
Here, and once again, I'm just going to take a bearish stance because,
Are you bullish on their new CEO coming in a week?
very much so.
Yeah, he's
Okay,
going to
that's
lead.
all that
He's going to
matters.
lead Q3 or earnings call, isn't he?
dude, he has 2 last names as like Alex Chris. Like, how do you not? That guy fucks, bro. Alex Chris.
Okay.
Like, come on, bro. That's like if Steve's name was Steve John. Like, that's the cool name.
Oh, that is my middle name. It's funny.
Really? See, I knew you fucked.
But here's one of the problems, okay, with PayPal, because if anyone wants to see the bullish side that I'll take on PayPal, I do a daily show, literally. So let me burst out here for a second.
Everybody thinks there's a ton of competition, which there is.
But it's real though. It's not just thought of competition. So PayPal is losing market share.
How about this? Somebody
Every
should
year.
acquire PayPal. How about that?
What?
Somebody should acquire PayPal.
I agree.
It's a great acquisition for several companies.
I know one thing we can talk about.
No, we're literally in the midst of a conversation, Tevis.
This is how you know we didn't have any topics this week. Wait, what were you gonna say, Tevis? What were you gonna say?
I was gonna say the Apple stock trading thing.
It has nothing to do with PayPal.
No, I was putting that, man.
That is important though, and I've got some strong.
That news
views
is kind
on
of
that.
BS though. Apple shut that shit down. Like apparently the
What
whole story
happened?
was Apple was going to launch a
was gonna
Robinhood
start
competitor
the
in
stock
2020.
I can't understand what both of you talk.
All right, go ahead.
Apple was going to launch a Robinhood competitor in 2020. Then the market crashed and then they shut it down. They were like, "We'll not do that."
Yeah, they were supposedly working on that with Goldman, correct?
Yeah.
Okay.
Okay, Tanner,
Yeah.
go ahead.
No, it'll be back, but
That was it.
just okay. Oh, real quick, and then we'll get back to that. PayPal, the one of the biggest problems is that if they are losing market share, which they are, to Apple Pay is probably the biggest gainer. Once again, Apple. Okay. If that is happening and that's the bulk of their income is through PayPal checkout, that this is all a short-term play for all of us. We're all talking about having this for a short term. But yet if rates stay higher for longer, that means that the short term is going to extend longer and longer, all well, unlike SoFi that continues to gain strength, PayPal could be losing strength within that time. And so the thesis could actually change between now and September of 2024.
So you're less bullish.
That's a good point.
I'm not less bullish. I am less bullish in the sense that the rates getting held higher for longer does suck. Yeah, that's true. But there is things that are exciting about it. Like PayPal, a lot of the money that they have been making recently is from net interest income, similar to Robinhood, where just people have a lot of money and that's making them more money over time. And so they'll be able to make that money for longer, but all while they're going to lose market share in branded checkout.
Can I say something? Because you just reminded me of the higher for longer thing, and it's political, and I don't want to get political, but it's just one statement, and it's just like makes me laugh a little bit because the election is right around the time when the Fed is slated to start cutting rates. And I can just imagine a scenario where just Trump wins again and the market just starts roaring again.
Yo.
It's like his whole thing, man. He's like, oh, we had a great market. And then poor Biden took over. And we just had like the drawback of all the rates and recession and inflation and all that stuff. And
You know what we should do? You know what Trump did? You know he got corporate taxes to 21. What if we just put that shit to 0?
I mean, I'm a corporation, so I don't really
What
care.
if we just like don't tax corporations at all? How much more money would they
What about
have?
if we just rewrite the freaking tax code to make it make sense?
No, but like what if we just don't tax companies like big corporations?
You had it right the first time. Just don't tax.
I feel like that would solve all of our problems, to be honest. That would unleash this economic money. But anyway, no, I'm just
So,
kidding.
the only way that you can do that and make it work is if you implement a flat tax on all goods and services purchased, which could work very easily, actually.
I mean, maybe the flat tax theory is
Flat tax on consumption will work and it'll balance the books. You just got to work backwards. We can do a whole episode on actually. I think I sent it to you. I wrote a whole tax plan by reversing the numbers.
Let's do that on the Alternative Asset Weekly.
Okay, going to your PayPal point, I think Tanner's actually correct about this because, like, if PayPal shits the bed, all of Twitter and fintech Twitter is gonna like cry because this is the most beloved stock on the internet right now in terms of a recovery play. And I think Tanner's right that there's a good argument for the bear case, especially with interest rates higher for longer. And PayPal could end up being that value trap. Now, I think there's a lot of arguments for why
You
it
can
won't,
make
but
a
it has
bear
a
case
shot.
for almost everything in this environment.
Yeah. Look, I think the CEO coming in is going to have a lot of just goodwill by mere fact of having a good, solid reputation and having, his tenure ahead of him. So that's going to it's going to counteract the higher for longer for some period of time because investors are going to hear him speak and he's going to have some vision or some turnaround or some strategy. And they're going to give him the benefit of the doubt for at least a couple of quarters until they start seeing the execution. And that was not the case before. And so I think that that's a unique circumstance with Alex Chriss coming in, just because he's new and he's coming from a good track record at Intuit. And I think that alone has the potential to counteract the higher for longer thing because people are just going to be giving him more of a premium because he's a new incumbent.
Right. And also don't forget that they still have $2 billion going toward buybacks by the end of the year. They are still buying back shares, and they were probably buying back shares in the mid 60s. And when I say mid 60s, I mean 63 to 67. That would be mid to me. So 63, 64, 65, they were buying shares. Most likely, they're probably buying shares here. And as long as they continue to make billions in profit, and as long as they continue to buy back shares and they don't screw that up, it's going to be hard to really crash much further. Obviously, it can. But my personal plan on this is I have not met the capital yet that I'm willing to spend on this. I'm going in slowly because it's on a downtrend. And I'm just going to keep dollar cost averaging into it over the next couple of weeks or maybe month or two. And after I'm done dollar cost averaging, if it hits a certain number, I'm going to sell because I don't know that I would just wait for a rebound. But I don't think that the number that is my pain tolerance will ever get hit because I'm willing to ride this thing probably down to 40 or so.
What's that number? What is that pain tolerance for you?
40.
40?
Around 40 in my head where I'm planning on adding shares as it comes down. Getting down to 40 would be enough of a loss to make me say I'm not going to make the same mistake I've made in the past. I'll just get out. Like I'm stuck on Alibaba. I've been stuck on Alibaba and I may buy more because I kind of don't have an option at this point. I can always sell. But
yo, this guy Steve texts me at 7:30 a.m. today. I'm thinking of getting more Baba. I wanted to call him, but I had to prepare for my show. I was like, "Are you a communist? Like, what's wrong with you?"
No, I like money.
All of these American companies that are undervalued, and China's the guy they chopped off Jack Ma's head. You're like, that company. That's the one I want.
No, but think about the thesis.
No, we're not going to get into the thesis. It's China or the United States. Pick a side. It's very simple.
Oh my God.
Obviously, you know what side I'm on. But if I can make money on a Chinese company, sure.
But there's so many companies in the United States that are.
And I'm invested in a lot of companies, and Palantir is probably my favorite.
Isn't Baba an ADR?
Yes, it's ADR too. Yep.
So you're not even buying the shares of that company. You're buying like some holding company that has it.
He's buying some bullshit, basically.
Oh, no,
ADRs are bullshit, bro. I've held ADRs before. I'm like, what the fuck? This is not even a stock. What is this?
Okay,
shit?
have you ever looked into what happens if it gets delisted? Because I have. I've actually called my brokerage.
Yeah, you're fucked.
What happens?
You're fucked. That's what happens.
No, you're not. Well, I would not be fucked because I know what I would be getting from my brokerage and how I get rid of it and how long it would take.
Why would you even put yourself through that? Is my point. Like that's so ridiculous. Versus
not enough money where it matters.
Tanner, you've lost control of the stream.
Yeah, absolutely. I was really looking forward to talk about Apple and Goldman Sachs, but I'm glad that Steve is on the side of America versus China.
We got
Steve's
2 minutes.
bro. Steve's a communist.
If you know what's funny is I actually have been finding amazing companies. Oh, I mean, they're not amazing until I hold them for a little bit longer, but
wait, I know what to talk about now. I thought of a topic that was good. Are you going to actually say something
America
important,
has
Andrew?
been very fruitful. Okay, there's stocks in Europe and there's stocks in Latin America that are doing amazing, and it's always great to look around.
Have you looked at Walmart Day Mexico like I told you to?
No, I did not. No, because
okay,
let me get.
Yeah, we're not buying Walmart Mexico. So I was right on my Instacart thesis because that guy's going down. And
that's
SoFi's,
fine. No one
there's
said
gonna be a lot
that.
of bag holders on SoFi's app with Instacart shares. So I just want to say
one, you don't know that. Two, SoFi has given people the opportunity to make money. It did run up, which means that people could have sold off.
I hope they did.
What?
I hope they did because it's $29. If SoFi's down 17%, we know Instacart's not staying at $31. Instacart's coming back down, bro. Just like ARM. And anyone who bought it on SoFi that thought this was gonna be the next big thing, like you're gonna lose some money.
And they're gonna blame SoFi. They're blaming SoFi for that.
That's not.
I think they're not gonna feel happy towards SoFi though.
Well, that funny enough, that is why Apple didn't continue with them creating a stock trader. Is that they thought that the audience would be blaming them for the stocks going down, and so that's why they stopped.
Look,
wait, how do you know that? Did you read an article about that? Because
Yeah.
that was my thesis. But
Yeah.
okay, that makes sense.
I wish that Apple would freaking do something with that large cash pile in addition to the buybacks and dividends. They need to make, well, they don't need to do anything. I would like to see them make an acquisition.
Do you want them to buy Alibaba since Apple has so much exposure
No,
to China? These
I
Chinese
think
communist
that,
buddies just get together and,
no, I think that they need to make a content play and take a chip off the table. And I think Warner Brothers Discovery is at a
No.
cheap enough level.
No.
Yes.
Who watches Discovery?
Dude, do you even know what is in the Warner Brothers
Yes,
Discovery
they have National
portfolio?
Geographic. They got fucking tigers having sex with pandas or something. Like that's not. No one watches that, Steve. No one watches that.
Have you ever heard of HBO?
Max?
Oh, that's part of Discovery. Max is part of.
Warner Brothers owns fucking HBO, dude.
Oh, never mind. They should. Yeah, that's a good deal. Never mind. That's a good deal.
They own so much stuff. Actually, look into it. CBS.
I mean,
Turner.
Apple has their own proprietary content play. They don't need to really buy.
No,
IP.
but you take the. Think about it. You take this off the table,
You take a competitor out too.
and you put it right in Apple TV. You boost services. You don't syndicate any of that stuff on anything else. Disney can't buy it. Netflix can't buy it. Amazon can't buy it. It's a great opportunity. The valuation's cheap too. Ton of content.
Did you see Amazon was raising the price of Prime?
Yeah, fine. It's the best supply chain behind the Department of Defense.
Look at this. Johnny in the chat says, I'm literally watching Discovery Plus right now. Well, I guess I was wrong about that.
You just run SoFi
Dude, the
Weekly and
valuation-
Discovery same time?
Admit, it's a 28 billion market cap.
So they would have to pay what, like 40 for the premium?
It's 2 quarters of buybacks.
That's true. That's true.
Two
No, Apple
quarters
should
of
definitely do
buybacks.
something with their cash. I agree. I agree. I don't know if HBO is the best option, but
I saw this thing where I was like, Apple should just buy Pinterest or something. And then people are like, oh, why would they buy Pinterest? And they're like, dude, it's like 4 days of free cash flow.
That's so crazy.
Yeah,
I think
they
the
should buy
problem
Pinterest, bro.
is that too much M&A from Apple, especially at this point, would just lead to a lot of antitrust.
that's true.
Not
And so they just have to
necessarily.
develop internally.
Okay, so let's stick on this topic because somebody, I'm not going to mention their name, and I were talking about this today. The only one that really has an antitrust problem would be Google or Alphabet.
I mean, Amazon's going through something literally today.
Nobody can prove Amazon has any monopolistic characteristics. Take every business that they are involved in. Shipping, okay, look at the competition. FedEx, UPS, United States Post Office, DHL, and every third-party carrier. Not a monopoly there.
I mean, they promote all of their products first on the store
it's all their product.
But that's not a monopoly. That is a business change that they would possibly have to make. But they have a marketplace
other people can't compete.
Yeah, it doesn't actually have to follow that 70% rule. That's not the only chance that it can be antitrust.
Hold on a second. Walmart makes more revenue than Amazon. There's no antitrust thing there because they're not even the biggest retailer in the US. That's one. Two, Amazon offers a platform for every small business to utilize to reach customers they never would have. It is beneficial to everybody. Now, if there's something with their business practices with Amazon private label that gets tweaked, that's one thing. But saying Amazon's a monopoly is the craziest thing there is.
What they should do, they should get Andy Jassy, lock him in a cell so that he can't leave for 3 months.
Stop working out.
We love these Chinese companies getting rid of the CEOs. We should do the exact same thing to Andy Jassy, and then it'll be okay.
He'd probably get in line, honestly, after that.
Or we could just try to get Bezos to run for president.
I would vote for Bezos.
I'd
Have you
vote for
seen
Bezos
his guns?
for president.
Have you seen his fucking guns? I'd vote for Bezos in a second. He would have my vote immediately.
I've been seeing your guns, Amit. You've been posting daily on going to the gym and doing full pull-ups. I like those pull-ups. None of this half stuff. All the way down to the shoulders. Good for you.
All the way down. Get to your fucking knees and come right back up. Yes, sir. Okay.
Wait. Can I take it from here real quick?
Go ahead.
Okay. I just wanted to say before we go
going.
that on Monday we're doing a show. If you guys are wanting to learn a little bit more about PayPal, want to learn a little bit more about other payment providers, it's going to be a massive deep dive into PayPal's, maybe one of their biggest competitors named Adyen. Okay. I've been buying this company up. I think it's a great buying opportunity. I'm giving my full deep dive on this channel, on Tevis's channel at 6 p.m. Eastern Standard Time on Monday. That'll be a big show.
On what show? What's the show called, Tanner?
That's the Stock Tank show. It's a series that we do weekly.
Yo,
bi-weekly, we're not
ironically,
sure.
today I was at this like area where they were selling fish tanks.
What's the ticker?
So like
There you go.
stock tanks,
ADYEY.
ADYEY. It's maybe one of the most interesting stocks on the entire stock market. A golden child of payments has recently been hit with some rough reporting, which has led to a massive sell-off and a possible amazing buying opportunity.
Chamath likes this stock, right?
Everyone likes this stock.
But does Chamath like this stock?
He's been on both sides of the argument, saying that he's
Wait.
not been bullish on payments,
Wait.
but he does say
Hold
that
on.
Adyen's the best player.
Tanner, I have a question.
Yeah.
Okay, I gotta go, guys.
You can be a
Round
judge
week
on
is
this
starting.
show
See you guys in a
on
bit.
Monday, Stephen. We're not doing it right now.
No. I have a legit question.
Okay.
Why is their book value $96?
They're a European okay, go ahead, Devin.
Well, no, we're not talking about this right now. There's a whole ass episode for this on Monday at 6 p.m. We could talk about that then.
Steve, join us.
Can't just tell me why their book value is $96 and the stock's at $7.
No, thank you so much. But bye for now.
See ya.
What?